Peter Schiff, CEO of Euro Pacific Capital, joins us live from Connecticut. Peter, market seems to be telling us, despite the solid economic numbers that we saw in the housing market and amongst the consumer, the growth prospects in the US are in jeopardy if the fiscal cliff isn't resolved.
Well, first of all, I think it's really a propaganda victory for the U.S. government that they've actually convinced the markets that the danger is that we actually do something about reducing the budget deficits. The real danger is that we don't go over the cliff and the budget deficits get bigger and bigger. And I also disagree that we have solid economic data. The fact that consumers are confident enough to spend more borrowed money on imported products, that doesn't mean the economy is actually doing well, or the fact that the Fed has been successful in artificially lifting home prices with cheap money, when the fact of the matter is real estate prices are too high and lower real estate prices are part of the solution. Keeping them artificially high just makes the problem worse.
But are we not seeing some real momentum now, some real traction in the US housing market?
No, there's no real traction there. Remember, the only reason that the market isn't moving lower is because interest rates are at 0%, the government is guaranteeing all the mortgages, and then the Federal Reserve is buying all the mortgages in the secondary market. It is a completely artificial bubble. They're trying to reflate it. It's not going to work, and not only that, it's going to undermine a real recovery because we are diverting resources to housing that are badly needed in other areas, such as, real production, manufacturing. We have to start producing some of the goods that we're consuming. We can't keep borrowing the money from the Asian economies that are producing all these things, because eventually these Southeast Asian economies are going to get tired of vendor financing a deadbeat customer. Because unfortunately, no matter how much money Asia loans to America, we're never going to pay it back. It's not even possible.
Right. If you strip away all the liquidity support that we are seeing in the markets and in the broader economy, Peter, how would you describe real underlying demand?
Well, look, demand is always, infinite. People want things. The key is to produce things. And in America, we're not producing. People can want all kinds of stuff, but we don't have the capacity to produce the products. That's why we have to suck in all the imports from other countries, because our economy is not capable, with all the regulation, all the taxes, we're not able to produce the things that Americans want. And what we've conned the world into doing is supplying us with those goods on credit. But what we really need to do in America is not focus on demand. We have to focus on supply. We have to get Americans working productively to produce the things to satisfy what is basically unlimited demand, because everybody wants everything. The key is, how do you supply, how do you satisfy those demands with real goods? How do you produce consumer goods? And you need investment, you need savings, and unfortunately that's what we're lacking in the United States.
Peter, you say that the U.S., in your notes, needs deep and prolonged austerity to get back to real growth. Are you suggesting that we go over the fiscal cliff?
Well, I'd rather go over a steeper cliff that was mainly spending cuts. The unfortunate part about this cliff is, A, it's not nearly big enough to do the trick. B, it's over 80% tax hikes, and in particular, there are a lot of taxes that are going to fall on capital, on savings and investment. We shouldn't be raising those type of taxes. To the extent that the government gets more revenue, it should be consumption-based. It should be taxing people for spending money, not earning money, saving and investing their money. But of course, we need real cuts in government spending, not just these make-believe cuts that we have as part of the fiscal cliff, but we need real serious reductions, much bigger than we're talking about, because the government needs to free up these resources so that the private sector can use them more productively. Right now, the government is an enormous drain on the private sector, and they're preventing the private sector from producing the types of output that we need, so that we can produce goods to satisfy the demands of Americans and not rely on the rest of the world to supply us with that stuff on credit.